Good morning, ladies and gentlemen. Thank you for coming today. It is my pleasure today to make public the Auditor General's report on financial and performance reporting, EPS, for the year ending 30th of June 2014, which was recently submitted to the Legislative Assembly. As Acting Auditor General, I am following up on the work of former Auditor General Alistair Swarbrick, who delivered this report to the Legislative Assembly before he left his post. I have today with me Mr. Patrick Smith, the Audit Principal, responsible for the OAG's financial audit practice, and Mr. Martin Rubin, the Audit Principal responsible for the OAG's performance audit practice. I'll start by making some opening comments, which will be followed by an opportunity for you to ask questions about the report. The year ended 30th of June 2014 represents the first time that the Office of the Auditor General has been provided with sufficient information to conduct an audit of the consolidated financial statements of the Cayman Islands government. Previously, we've issued disclaimers of opinion because we were not provided with sufficient information to conduct an audit previously. While being provided with the information required to conduct an audit for the 2014 year end, the outgoing Auditor General signed an audit report with an adverse opinion. In effect, this means that the information in those financial statements is not reliable, and therefore the financial statements do not present fairly the financial results of the Cayman Islands government. There are four kinds of audit reports that an auditor can provide on a set of financial statements. The best opinion is called an unqualified opinion or a clean opinion, whereby the reader can rely on the information being presented. The next best opinion is a qualified opinion, where certain line items on the financial statements or disclosures may not be fairly presented. The reader can mostly rely on the information being presented, except for with regards to possibly a few numbers. The next opinion we can issue is an adverse opinion, which is what we have issued on the government's 2014 consolidated financial statements. The opinion indicates that while the auditor was given information to conduct an audit, the financial statements are not fairly stated because of significant matters found during the course of an audit, including possibly insufficient information to conduct an audit of certain significant line items on the financial statements. The last type of audit opinion that an auditor can give is a disclaimer of audit opinion, where there's generally insufficient information available to conduct a complete audit. In addition to providing the Legislative Assembly an opinion on the government's consolidated financial statements, the Auditor General is required to provide an opinion on another important accountability statement called the Schedule of Appropriations. In this statement, the government is supposed to report on how they incurred expenditures within limits set by the Legislative Assembly through the passage of appropriation laws. One can think of the statement as reporting by the government of the legislative controls for expenditures. The report I'm making public today describes in detail the reasons for the adverse opinion, some of which I will describe further shortly. I just want to highlight now a few areas of the report. On the government's consolidated financial statements for 30th of June 2014 that were auditable for the first time, we issued an adverse opinion, meaning that they cannot be relied on to represent fairly the financial condition and transactions of government. There are several factors that led us to issue an adverse opinion that we describe in this report, including government does not have the procedures and controls to consolidate the financial reports from across the public sector. In order to prepare the consolidated financial statements for an entire government, there needs to be controls and systems in place to ensure that the information coming together accurately presents the financial position for the entire entity. What we found was government had not consistently implemented the controls required to ensure proper consolidation and elimination of intercompany balances and transactions. Therefore, the Ministry of Finance was unable to achieve proper consolidated figures. Secondly, the financial information related to the Public Sector Pension Board was not consolidated into the government's financial statements, as required by the accounting policies, understating, for example, the total assets of government by approximately $500 million. Thirdly, the government's properties in statutory authorities and government companies valued at approximately $186 million were not properly revalued for the purpose of including a fair value on the financial statements. In addition, the cost and valuation of government's road network that is required to be included in the financial statements is not available for reporting purposes. In addition, the financial statements are missing significant disclosures regarding the long-term benefits owing to employees. Amounts relating to government's pension and health care obligations for its employees in the future are required to be valued and disclosed in the financial statements. We had determined from the actuarial reports that the consolidated liabilities of the government are understated by $1.39 billion, of which $1.18 billion relates to post-retirement health care obligations that government is committed to paying as current employees retire at some point in the future. Also, as mentioned in our recent performance audit report on collecting government revenues, the control frameworks in place across government does not ensure the completeness of revenues being reported on in the consolidated financial statements. As noted previously, government was not able to provide an amount for revenue waivers issued in accordance with the requirements of accounting standards. Because of lack of controls, we are not able to determine how much revenue has not been included. In addition, the government did not maintain the appropriate accounting records to know how much revenue it was forgiving by not collecting what it was owed according to the laws. Finally, at the time we had to give our opinion on the consolidated financial statements, there are still a number of issues outstanding relating to individual financial statements throughout government that were unresolved. For example, of this kind of issue was a potential write-down of the value of the Clifton Hunter High School in the amount of $20 million, representing the impairment against the cost of construction. As you can see from the number of concerns I have raised with the presentation of these consolidated financial statements, I could only conclude that they were not fairly presented. As I mentioned earlier, this report also includes a discussion of my opinion on the government's schedule of appropriation that provides accountability for expenditure limits imposed by the Legislative Assembly. On this statement, we had to issue a disclaimer of opinion. In effect, what we found was the government did not maintain sufficient records to prepare the statement which is required by the PMFL. In our attempt to carry out an audit of the accounting records to support the schedule of appropriations, the government informed us that we are not in a position to make any assertions on the fair value embodied in the schedule of appropriations due to significant inconsistencies in which individual subsidiaries are measuring the amount of actual usage of appropriations, i.e. certain outputs are being measured but only as a fixed fraction of the annual appropriation without due regard to actual measurable outputs based on the purchase agreements. This is a significant shortcoming for government's accountants. After 10 years of having legislation in place, the Ministry of Finance has failed to implement the systems and practices to provide accountability back to the Legislative Assembly for the legal spending limits imposed on government managers. The law requires this accountability, and we believe that there are fundamental structural issues that continue to prevent government from meeting these reporting objectives. In my opinion, this is unacceptable. While the government considers changes to the PMFL that would make it easier for accountants to provide the financial reports required by law, considerable effort would still be required to develop the kind of financial function to support this effort. We have not seen the kind of plans or activities that would lead to government achieving the requirements prescribed in the law. My concluding remarks are, while government has taken another step forward to the road to achieving their objective of full accountability for the collection and use of public funds, there's still significant amount of work that needs to be done in order to provide the accountability as envisioned in the PMFL in the use of those public funds. Our report provides a clear description of the many areas where government has to develop the basic management practices required to effectively manage public resources and create a credible financial function. We have recommended, once again, that government develop short, medium, and long-term plans for the development of the financial function. In doing so, I believe the Financial Secretary should provide a report to the Legislative Assembly on the progress being made. I don't believe the government can achieve the kind of financial reporting and accountability envisioned in the PMFL without strong leadership to this challenging situation. This report provides clear evidence to support the need for stronger leadership of the financial function in government to mobilize the resources that are needed to achieve this objective. Someone needs to take charge and make this happen. Thank you for your attention to my opening remarks. Mr. Smith and Mr. Rubin and I will now take questions about the report. Thank you.
Gentlemen, I want to start with one specific area in the report on page 10. Mr. Harrison, you made reference to it in your opening remarks. Where's the thing? There it is. Yeah, so you mentioned that the Clifton Hunter High School had an impairment against the cost of construction. I think if I remember my counting, that means the price you could sell it for now isn't what it cost to build it.
That would be essentially right, yeah.
Okay.
That we're saying the fair value of it is possibly $20 million less than it cost to construction.
What was the cost for construction?
Offhand, I don't recall. I'm not sure if you recall.
We don't
Mr.
have
Rubin.
we don't have that information here today. But
the earlier auditor?
It was
it was
in
in our report on
major
the,
capital projects.
Okay, so is that, my question is that unusual for a school? I mean, who would buy a school? I mean, I don't know, isn't school, you build a school for whatever, 110 million, would anyone ever buy it for that? Or is this something that's happened at the school that caused the value to suddenly go down by that much?
We would have mentioned that in the major capital projects building schools report, the reasons of what went wrong with that whole process. And I believe some of those reasons given in that report would indicate potentially why the value would have gone down potentially by that $20 million that we have indicated here. So that would be kind of the fair value that someone may pay would be $20 million less than what it was constructed for.
Mine's a bit easier. Have you had any response from government? You mentioned wanting the financial secretary to make a report to the Legislative Assembly. Has there been any response to your request for that? Or your recommendation?
Basically, in our recommendations in the back, we had made that recommendation, and management agrees with it. And so a tentative plan is to be developed by December 2015. This plan will be subject, again, contingent to the proposed amendments of the PMFL that they're making. So, but they are hopefully going to be doing that, and we would anticipate the financial secretary would make that progress report available to the Legislative Assembly.
Morning, gentlemen. Wendy here from Cayman News Service. Quite a few years ago now, the Deputy Governor publicly took responsibility for the leadership on this project. What obviously you're saying it's not good enough. So what do you say to the Deputy Governor that he needs to do to get this right?
In regards to that, again, it's the leadership, I think, within the Ministry of Finance where it's lacking, is what I said as well in my opening comments, that basically what we're hoping to see is the financial function, the framework for around the financial function to be able to consolidate, in this case, the entire public sector financial transactions. That's where the leadership needs to be strong so that they can perform that and have consistent policies across government, across the entire public sector to be able to bring together the financial information, as I mentioned, eliminate any interagency transactions that are amongst the companies as well.
As that's, you made that clear, that's more of a technical rather than a leader. So are we talking, who is responsible? Are we saying, is this the financial secretary, the financial minister, or the chief officer in that ministry?
So
Or the accountant general? Who is it that's not, that should have done that, be working on that system that isn't?
in regards to that, we would, currently the position was the chief officer, and now it's the responsibility of the financial secretary and the chief officer, as those two positions have been combined. So that's where we would expect the leadership to really come from in driving out basically that financial function throughout government.
Page 9 of the report, gentlemen, the 1.18 billion healthcare liability obligation. Who else in the world that you all know of puts that figure for healthcare liabilities in their financial statements? Do any other governments in the first world do that?
I'm not aware of any. I know there are some governments that are doing it who are following international public sector accounting standards.
Does the U.S. or the U.K. do that currently?
No, they do not.
Okay, so the question is, if that were put in the financial statements, the overall net worth of the Cayman Islands public sector would be negative hundreds of millions of dollars, probably.
It potentially could be. The other part they haven't valued is, and put in the financial statements, is the value of their road network, which is quite significant as well. So that may counterbalance the liability to a certain degree.
But why should they? I guess the question that government's asked me before, and I ask you guys to it now. Why should they put that in their financial statements if the other people, particularly the mother country, don't do it?
Well, the key thing really is in terms of what the current legislation says. So the government basically prepares financial statements in accordance with IPSAS, and that's actually embedded within the PMFL. If there was a move to actually not include the liability, there would need to be amendments basically to the law to suggest that. So you refer to the UK.
They're not following the law. It's their law says they've got to do it. They're not doing
That's correct.
Correct,
And then
yes.
the accounting standards.
And the standards. So like you mentioned in the UK and the US, they actually have amendments to their accounting standards that actually allow them to not include that liability.
Worldwide, Brent, the international accounting bodies responsible for government accounting are pushing governments to adopt the international standards for public sector accounting, IPSAS as it's known. So the Cayman Islands government is definitely one of the first governments, if you wish, across the world to be implementing these standards. But there are many other countries, as the acting auditor general has said, that are adopting these standards. So as governments adopt these standards over time, the comparability of financial statements will become better and better. But that shouldn't prevent the government here from, first of all, complying with their law, which requires them to follow IPSAS, and as well to continue to adopt best practices that are being adopted around the world.
Yeah, I guess that in part would have answered the question I had. The value of the roads, as you mentioned, schools, different things that are assets, but are assets that won't be transferred, right? Might it not have been easier to just adjust the law, barring what you just said about the international standards, to prevent them from having the burden of putting that in, and we constantly hearing that this is not being done? Is that an option for them?
Well, it is an option, but I think it's important that they follow the standards recommended by the international community, excuse me, in regards to public sector accounting standards again, because what you want is government to be able to manage these significant future liabilities that are coming down the road. And without them, if they exclude them out of there, quite often when you exclude it, you don't even think about it. You ignore that potential significant issue coming down the road when they're going to have to fund people's medical, that healthcare obligation once people retire, future pension obligations? Can they actually fund it? And what resources or taxes may they have to implement in order to be able to fund these types of programs that they have for the people and employees?
Looking at the Save the Mortgage situation, realizing that about 4 out of every 10 loans, there was no repayment at all during 2013-2014. And it's been declining in terms of people repaying those loans. What could be done? Because here it is, government trying to save a mortgage, but it's a double-edged sword. How do we recoup this money from people who aren't paying?
I think,
Especially when the name is Save the Mortgage.
yes, I won't potentially answer fully your question, but in regards to that, what government has done is basically the value of those loans under the Save the Mortgage program is really zero. It has a zero value, so they've really had to just expense the cost of that program as well. And we made it clear from the start of that program that it was being operated essentially unlawfully or outside, was managed outside the framework required by the PMFL. And from the follow-up work, as you mentioned there, that we performed in 2013 and the work we've conducted in the 2013-14 EPS audit, it's clear that the advice we had previously given wasn't taken on board as well. It's about all I can say in regards to this.
So this is pretty much a $2 million write-off of cash spent that we don't expect to see back by and large.
That's correct.
When those loans were given out, Ben, they were given out on the basis of 50-year repayment terms, most of them, and at 0% interest. The accounting standards require when you give out a loan, you have to basically establish what is the net present value of those loans if you, for accounting purposes. And accounting standards require you to write those amounts down to zero, as the Deputy Auditor General says. So at the time they were actually issued, the government accounting should have been to actually record them at zero value and to expense them because of the way that they were structured in the very first place. The fact that they are now all in when they're repaid, the government is supposed to take those amounts back into revenue in the years in which they collect the money. But in effect, most of that, as stated in the report, most of the loans are in arrears, and most of those collections are not taking place. And more recent information has been provided in the Legislative Assembly, which indicates that situation has probably gotten worse since our report was issued.
Should it be that governments who look to do this sort of thing just decide, here it is, it's a grant, it's money I'm giving you to help you, and not waste time to look at getting it back, since they're not getting it back anyways?
Right. As the Deputy Auditor General said, we gave advice to the government at the time that loan program was set up, and the emails around our advice were made public by the Ministry of Finance. And at that time, we said exactly that, Ben. We said that, if you're going to structure a program, make it one that is robust and can be managed effectively. But we made a number of comments at that time, and as the Deputy Auditor General said, that advice was not followed.
Just, gentlemen, back to again on page 9. There are two figures in there for post-retirement health care and post-retirement pensions. Are those figures what the government actually ended up spending in 2013-14 for those amounts? Are those one-year expenses?
You're referring to the 116 million and 24 million?
Yeah.
No, those amounts are actually the amounts that were included in the actual evaluation report in 2014, not the actual amount that was actually incurred by the government in 2014.
Okay, I don't understand the difference.
Well, the difference would be that the actuary would give an indication of what the expenses would have been, which would have been the change in liabilities between 2013 and 14. The government's expenses would have been actually the outflow that actually occurred throughout the year. As noted.
But that's not what that is.
No, that's not what that is. No.
The government's not spending 116 million a year on.
In actual cash.
Yeah. So we're saying basically, like in the preceding paragraph, basically 31, we're indicating that it wasn't possible to determine exactly what was spent because there was a lot of commingling between the expenses for the year.
Okay, so because of the way they put the pension funds together, they can't tell what they're spending each year on pensions. Like they don't have like an amount. Is there an amount, a line in the budget where you can say, I spent 20 million on pensions this year? They don't have that.
Well, if they do have it, it wouldn't necessarily be accurate. That's part of the problem that we've had.
Could I just remind those present today to use the microphone?
What, as an audit office, what else do you think you can do to solve this problem that's been going on for 10 years?
In regards to his audit office, I think the way we hopefully are helping is just by identifying again where some of these issues are lying and bringing it to attention to the deputy governor, to the legislators, to the public, to drive some hopefully changes in government for this. Again, as you know, and as you mentioned, it's been a long-term problem, and we've communicated in several reports over the last 5 years some significant leadership issues, and we're continuing on with some of that. So they really need, from our perspective, to get the right people in the right place at the right time for certain functions, and especially around what we've discussed here with the financial function. We need to see either individuals who can understand the proper financial function of this government here and how it should be implemented.
On page 22, as I glance through it, it just jumps out on the executive expenses. They speak about limited, weak, or no controls in place to obtain assurance that funds were used for the purposes intended or complied with any terms and conditions of award. That jumps out to me as saying, hey, the guys in the big offices are giving money and really don't seem to care that I gave you money for X, but you could have spent it on Y or Z or whatever you wanted. Do you have any evidence of this actually happening?
We didn't follow the dollar that way, but what we were hoping or anticipating would be within government that they would have had systems and practices to follow the dollar and have basically the money for these transfer payments going out to individuals, that they would have systems and practices in place where they would actually report back to the government or ministry in charge of that transfer payment of how they spent it and used those funds provided.
A good example of some of those situations were described in our recent report on the nation building program, for example, where money was provided and there was no indication of how those funds were used for the purposes for which they were intended. But that was one example. Another example could be for, again, what we have reported on with regard to social assistance programs. Again, once the monies have been distributed, there's no assessment of how those funds were used or whether they were needed or how they were, whether they were met the objectives that they were designed to meet. So that's what we were referring to.
So just to get it right, so after all of the noise about the nation building program, nothing has been done to address the tightening up of this by government? Is that what I'm reading?
Keep in mind that this report is a report on the activities of government for the year 2013-14. We have recently completed the audit of the nation building program, which was again, which had ended in 2013. So those, has government, the question would be, has government taken any action since then to develop more robust practices around transfer payment programs? And the answer to that question is we understand the deputy governor is in the process of doing so. We're working, as we understand it, he's got a committee that will be looking at that and will be addressing that very subject.
So when you guys talk about all the different entities having their different practices and things kind of not being on the same standard, what does it take to get a standard implemented? Is it like one guy in an office just says, hey, this is the new way we're doing things, here's some new piece of paper, or is it like a agency-wide software? What is the solution? Does it look like something that's more like top down, or is it infrastructure based?
It's a bit of both, I think. Some of it is they need the proper systems and practices in place, so the systems to be able to consolidate the information. So government from the Treasury really need to put out there to all government entities, this is the information that we require from you, and then they need to have the systems in place to be able to consolidate that information and know that it's complete and accurate as well.
Just have one more. So just looking at this kind of an overall view, this report says, among other things, there are 1.39 billion in understated liabilities, 500,000 in understated assets, mostly from the Public Service Pension Board, and you don't know what the roads are worth. 612 million in revenues that the government basically can't provide receipts for, and a number of buildings that may have an overstated value. Okay, that's all correct. So saying, moving forward and we need leadership and that's the sort of thing is fine, but who's going to be held accountable for this? I mean, how does that happen? I mean, if one might say that somebody should be fired over some sort of mismanagement like this. Yeah, so who gets fired?
We have to obviously leave that to the deputy governor. It, again, will fall under his responsibility of how he wants to deal with this situation. As we mentioned in our reports over the years, it's been continuing on and ongoing, so it is up to deputy governor to determine the right people he needs in place to be able to carry out this function within government.
We've described over the years in our reports, Brent, as the Deputy Auditor General said, where we believe that there needs to be a stronger central financial function in government. Not a centralized financial function, but more centralized in terms of the leadership and direction needed for the entire public sector for it to be able to carry out its requirements as stated in the public management finance law. It's essential in order for the success of this function for that to occur.
Fine, but just one more quick one. Does this office think that the people, not necessarily like the deputy governor, but the people under him, the CFOs, whoever handles the day-to-day runnings of do you all feel that these people know what they're doing, or do they not know what they're doing?
I think how we would answer that one, again, is based on what we've reported in the past of leadership required, and that leadership could be right from the top, from the financial secretary, chief officer leadership roles that they have to play, to the CFOs as well. It's in conjunction with all, in a sense. And obviously there are some weaker players within government, and there's some better ones as well. So it's how do you get them all to work together?
I think at this time, there being no further questions, we'll end our press conference there. So I'd like to thank everyone for coming out today. And if you have any questions, certainly would be looking forward to hearing from you. Thank you.